Hello and welcome to the December 2018 Nutmeg Investor Update. I'm Martin Stead, the CEO, and I'm joined as usual by Shaun Port, our Chief Investment Officer. Hi Shaun.
Hi Martin.
So before getting into this month's update, I thought I would take this opportunity to reflect on some of the achievements this year at Nutmeg in what has been a more turbulent and volatile year in the markets. So first of all, we were quite honoured to receive Philip Hammond earlier this year, who paid a visit to Nutmeg to take a tour and to learn more about our business. We talked about a number of matters, including Brexit and the impacts on Nutmeg for our business, for our employees, and most importantly for our customers. And we also talked about things like the lifetime ISA and why Nutmeg is a very strong advocate of this great product. What else has happened this year? Well, we've made a lot of developments in our Android and iOS mobile apps, and we know that more than 90% of our customers are using those apps each week to check in on their investments. You'll see a number of new features have been rolled out this year, including the ability to transfer ISAs and the ability to see a lot more detail in terms of what's in your portfolios. And we'll be continuing to invest in our mobile apps across the coming year to continue to build out that functionality. We also launched our personalised financial advice service recently, and that has been very popular with our customers. And so if you are interested in exploring financial advice with us, just visit our website and click on the advice link. I think probably the most exciting thing that we've done this year is the recent launch of our socially responsible investment portfolios. These come with a very comprehensive rating of the environmental, social and governance ratings of the companies that we're investing in. And we've applied that across all Nutmeg portfolios. But we're also giving you now the option to choose a more socially responsible option if you wish to, at the same price as our fully managed portfolios. And so that's been a really exciting development this year, and it's already proving extremely popular with a lot of people moving into our socially responsible option. So all in all, this has helped us to grow Nutmeg this year. We now manage over £1.5 billion on behalf of 65,000 customers. And it's a huge privilege and responsibility to have you as a Nutmeg customer. So thank you very much for choosing us. So before we get into the update for this month, Shaun, perhaps you can tell us a bit more about the thinking that went behind our socially responsible investment portfolios, which has been a big task over the last couple of years from you and your team.
Yes, Martin, that's right. This is something we're really passionate about at Nutmeg. We've spent the last 3 years working on this, and we've taken our time because we really want to do this properly. We know in the industry a lot of people have labels around socially responsible investments, but it's really not clear what's in these funds or these investments. So we've spent a lot of time, in particular in the last year, talking with our customers to see how we can reflect their values more in their investments. But not only that, to also give them more information to know really what they're invested in and how that is different from other portfolios. So, and we can see that borne out in the reaction we've had from our customers so far. Everyone seems to be really excited about these new portfolios, but also that how we're scoring all portfolios for environmental, social and governance factors.
Well, thanks, Shaun, and congratulations on bringing a brilliant product to market. So let's turn our minds now to investment performance. We know that the markets had a very difficult October, which impacted Nutmeg portfolios. How have things gone in November?
Yes, Martin. So if you remember October, yes, it was a very difficult month. If you look across the month, almost all global stock markets were down by more than 10% during the month at one point. They did recoup a bit of that loss towards the end of October, but it was definitely a very difficult month for equity investors. Now in November, we still had a very volatile month for equities, but really those the sort of investor sentiment of taking risk off spread to other asset classes. So if we look at high quality corporate bonds here in the UK, they lost 1.2%. If you look at European high yield bonds or junk bonds, they lost 2%. So some big losses in bonds, but also if we look at commodity markets, in the oil markets, the oil price fell by 22%, which is the largest fall in 10 years. So this sort of sentiment of nervousness did spread from equities to other asset classes. Now, if we turn back to equity markets, they were quite volatile in November. European markets had a bit of a loss, whereas US and emerging markets had a gain of around 2%. And most of that was concentrated in the final week of the month.
So why did US and emerging markets perform better in November?
So one of the few fundamental reasons for this volatility of markets we've seen over the past 2 months really dates back to the 3rd of October when the chairman of the Federal Reserve, Jerome Powell, said that interest rates were a long way from neutral. In other words, that interest rates need to go up much further and much faster than the market expected. And that clearly spooked investors, particularly investors in growth stocks like technology in the US. Those comments were unscripted. Now, if we turn to his recent comments on the 28th of November, very carefully scripted, Jerome Powell said that interest rates were very close to neutral. In other words, that the Fed could raise interest rates by 0.25% in December and would have to slow down the pace of interest rates into 2019. That's really helped investor sentiment, particularly when inflation appears to have peaked and the oil price has gone down a lot. It means the Fed has a lot more room to take its time in raising interest rates. That's very much helped sentiment, and that's the reason why markets had a good last week of November. Now, if we go into December, it seems that we've called a truce on the trade war between China and the US. Both presidents have agreed to a truce for 90 days. Now, we don't know how that will play out in the next 90 days, but again, that's one of the reasons why markets have been so volatile this year, all this trade tension between China and the US. If we get resolution to that issue, certainly that could help markets recover from here.
Okay, so that's the global picture. What about the UK markets?
So the UK equity market had a good October. It outperformed global markets, and that's because the UK market tends to be quite defensive compared to other markets, and it has a very low weight in technology, which we saw the biggest losses. In November, that reversed. So the UK equity market lost 2%, so clearly quite a big underperformance versus the US, for example. And that's partly due to the withdrawal agreement. That the overwhelming consensus within the financial markets is that Theresa May will not get this agreement through Parliament at the first reading, the first vote. So that's introduced some degree of volatility in markets. But also the fact that the UK has a high weight in energy stocks. And when we saw the oil price fall by 22%, it's not surprising the UK had a relatively tough month. Also, UK bonds had a tough month. UK government bonds lost 1.6% during November. So overall, UK assets had a tough November.
I see. So what does this mean for Nutmeg portfolios and their performance?
So performance was somewhat mixed in portfolios. Due to the quite large losses on bonds, our lower risk portfolios saw losses of up to 0.2% during November, whereas our highest risk portfolio saw gains of up to 0.6%, given the mixed nature of gains in equities. Now in December so far, we've seen some reasonably good gains continue that rally we saw at the end of November, given the agreement between the Chinese and the US presidents.
Okay, and how about our socially responsible portfolios? How are they doing?
We launched these portfolios on the 20th of November, but we've been managing these portfolios for some time now for our staff accounts. Now, if you look at performance for November, it was quite a lot better than our other managed portfolios. There are several reasons for this, but one of the big reasons is that because the portfolios are low carbon, they didn't really experience the full brunt of this big drop in oil prices. So oil prices are going down 22% in the month. It's not surprising that the energy sector was one of the worst performing sectors globally during November. It's also a good time to highlight that we would expect quite marked differences between the performance month to month of our socially responsible investments compared to other managed portfolios, but over the long term, we'd expect performance to be very similar.
And has the investment team made any changes this month to our socially responsible or our fully managed portfolios?
No, Martin, we haven't made any changes. I think through the rest of the year, Brexit headlines are still going to be very much front and centre, driving the prices for UK assets in particular. We don't think that Theresa May will get this agreement through Parliament at the first reading, and we don't actually see a hard Brexit. I think we'll end up potentially with something softer than this agreement, maybe a Norway-style agreement, or perhaps even a second referendum, but I don't see a hard Brexit. But that volatility will still continue to affect UK assets, in particular the pound, particularly for the next few weeks. Outside of the UK, the investment team are really focused on what happens in 2019 and 2020. We talked about US interest rates before. We also think the trade situation is starting to improve, very slowly, but starting to improve, and that's very important for the outlook for next year. But overall, equity markets look cheap. If you look at developed markets outside the US, they're the cheapest we've seen since June 2013. Emerging markets, the cheapest since 2014. You could say the January sales have come early.
Okay, thanks for this month's update, Shaun. So let's turn to this month's customer question. It comes from Charlie on Twitter, and he asks, how can I be sure that you're paying equal attention to the socially responsible investment portfolios as you do to the fully managed portfolios?
That's a really good question, Charlie. So first off, it's important to say that we have one investment process that's developed in-house by the investment team. So when we have a view that we prefer US companies over Japanese companies, that will be reflected across all our managed portfolios, including the socially responsible portfolios. However, the implementation will change. So for the socially responsible portfolios, we'll use a different exchange-traded fund to deliver that investment view. but decisions will be made across all portfolios at the same time. Now, finally, it's important also to talk about that we've become a signatory to the United Nations Principles for Responsible Investing. Now, as part of that commitment we've made, that we have to embed analysis of environmental, social and governance factors and risk into our investment process. And that's not just for the socially responsible portfolios, but that's for all our investment choices.
Thanks, Shaun.
Thanks, Martin.
And thank you for tuning in to another investor update. That brings 2018 almost to a close. So all that's left for me to do is to wish you a very happy Christmas.